Good day, students. My name is Mr. Qhobokoane from TVET College, stationed in Botshabelo campus. Today I'm going to take you through a module 5, which is a cash flow statement for financial accounting N4. The course is business management. Right. This report, which is the cash flow statement, is part of the financial statements that the business owner is supposed to get. Specifically in this case, we talk about the sole trader. And then this cash flow statement is different from the other financial statements, which is your income statement and the balance sheet, because income statement and the balance sheet uses what we call accrual concept. What does the accrual concept mean? It means that this, all the income and the expenses that are reflected on those statements doesn't determine the flow of cash, money in and money out. Right, and then when do we supposed to prepare this cash flow statement? We need to prepare this cash flow statement for the year ended, which consists of a period of 12 months. Right. And then what is the purpose of this cash flow statement? The purpose is that it determines the actual money that comes into the bank account of the business and the actual amount that goes out from the bank account. Right. And then the other thing that is very important in this report is that who are the interested people in these financial statements? Specifically, it will be the business owner, which is the sole trader, whether the business is making profit or loss. The other interested parties will be your credit suppliers, which will determine whether you will be able to pay them at the end of the month. And then the other parties that are very interested in this report, it will be your bank or the bank manager when you go to seek an assistant in the form of a loan. Right. Then the other thing that is very important of the cash flow statement is that it's different from the other financial reports because this one tells you your movement of money now, except in terms of the income statement and the balance sheet. Right. Then what is the procedure for compiling cash flow statement? The most important thing for you students or accountants, before you compile this report, you need to have 3 statements or reports in your table, which is your income statement, which is your statement of financial performance. You must have your 2 consecutive balance sheets, and then you must have information about your fixed assets, your non-current assets. Right. Then the layout of the cash flow statement. Remember, students, we must have a prescribed format, which is recommended by the International Financial Reporting Standard. How do you need to compile a cash flow statement for a sole trader? It must consist of 3 stages or categories. The first one needs to be your cash flow from operating activities, which is the main source of your income. How do you generate that income? And then the second step, it will be your cash flow from investing activities. That's where we say, what are your fixed assets you have? And then what other forms of investment that you do to supplement the income of the business? And then the other category is your financing activities. That's the questions, how do you fund your business? It can be your capital contribution and then to be your loan. Right. And then I've just added the other notes for you students in terms of these financial reports that will determine your cash inflow and outflow. Now, if we decide to sell certain assets, it can be land and building or equipment, but what are other things that we need to consider when we sell an asset? We must look at the depreciation expense on the asset that we are selling, and then we must determine the depreciation expense for the items or assets that are remaining from the business. And then when we decide to sell an asset, remember we need to follow the format or the formula that I've attached on my side, which is the historical cost price minus accumulated depreciation. It gives you a book value or the carrying value. And then from there you will say now, what was the intended selling price of the business and what is the book value or carrying value now? Then the difference, it will give you the profit or the loss. Now, student, the other thing that is very important, when we decide to sell an asset in this case, we must use what you call a proceed from sale of asset, not sale of an asset. Asset can be equipment or vehicle, whatever the case may be. And now, student, what is very important again here, when we prepare this cash flow statement, remember we said we need 2 statements, income statement and the balance sheet. Now, in the income statement and the balance sheet, there are transactions or items that we need to reverse them to determine the actual money in and the actual money out. What are those items? The first one is to be your interest on loan. It can be interest on loan, or interest on overdraft, on mortgage bond, or interest on overdue account. We call it an interest paid. This we need to reverse them since it appears on the income statement. Remember, income statement doesn't show the money out and the money in. The other item that is in the income statement that you need to reverse, we call it interest on fixed deposit, and then we call this interest on current account. Then in the cash flow statement, we need to call it interest received. And then the most important one, students, we have what you call depreciation. This, remember, we call it a non-cash item. We don't buy, we don't sell at depreciation. Now, we have written it in the income statement, and then it forms part of our balance sheet as well when we determine the total accumulated depreciation. So we need to reverse again on the cash flow statement, right? And then the other thing that is very important on the cash flow statement, we need to attach the profit or sale on asset that we have decided to sell. Why are we selling an asset? Because it's no longer productive or it's become redundant. We decided to sell. But every time you see the sell, you need to say, we sell, what was the cost? And then the difference between the sell and the cost, it will give you a profit on the loss. Right. And then I've attached to you, students, most importantly, an example of a cash flow statement for a business that called Payless Traders. Then that will be your cash flow statement, student. Thank you very much. I hope I've assisted you. Stay safe and good luck for your exams.